This is a session for how to own a unit of Celebration Green Villa. That's a three-bedroom bungalow in Celebration Parkland Estates through mortgage, right? And we have on call one of the representatives from the bank, Mr. Aderemi. So he'll be taking us on how mortgage works and all of that. So just a brief introduction. Right. So Celebration Green Villa is a hold on. Yeah, it's a housing project of three-bedroom bungalows, and they all come with BQ. Right. It's located in Idera scheme. It's located in Idera, Ibejuleki, and we have two different concepts. We have the open plan units and we have the closed plan units as well. So the CEO of Decla will join us soon, Dr. Enes Abulimen. He's the CEO of Decla. Decla Global Ventures has been in the real estate space for over 14 years now. Yep. And on the call as well is a representative of the mortgage bank, Mr. Aderemi Onifade. And yeah, I am Fubi Ekong. So when the CEO joins us, he would speak to everyone for a while. So let's quickly get to Mr. Aderemi. I believe he's on the call as well. So, sir, please, you can introduce yourself and then we get started.
Apologies for the glitch we have in network. So, Adewemi, I'm a staff from Imperial Homes Mortgage Bank. And basically, what we are trying to achieve here today is to make it simple, make it easy for people to understand what mortgage financing is all about in terms of acquiring a property in real estate. So that's what I intend to do today, to make it as basic and as simple as possible for us to have a better understanding when it comes to mortgage financing. My apologies. So let's start, please. So basically, you want to look at what mortgage is all about and to make it as simple as and easy for everyone to understand. So you can, my next slide, you can change the slide, please. Yeah.
Okay.
So basically, like I explained earlier, so I'm from Imperial Homes Mortgage Bank. And what we do, we are a Taiwan national mortgage bank. It basically means that we can process mortgages for anyone as long as you're in Nigeria, you live in Nigeria, we can process mortgages for you. That's our core, what we do. When we say mortgage, what is mortgage? So basically, a mortgage is a long-term loan that you use in a Yes. So let's just quickly take it up so that before my internet mess up again. So mortgage is basically a long-term loan you are taking to acquire a property. Like I said earlier, it's very important to understand that you cannot use mortgage to do any other thing aside you are using it to buy a property. You can't take a mortgage to buy even a land. No. You have to ensure when you're coming to when you say you want to buy a mortgage, the essence is that you are using to buy a property. Now, the property itself that you are buying with a mortgage becomes the collateral. So we don't expect you to bring any other collateral to stand in for the mortgage aside the property itself that you are using. So that's basically what a mortgage is. So the property itself you are buying becomes the collateral for the mortgage. So who gives a mortgage? So basically, family mortgage banks, we call them PMIs, okay? PMIs like the likes of Imperial Homes Mortgage Bank, and we have some of them outside as well. So they've been licensed to give mortgages. And also some commercial banks in recent months, they've also been involved with the process of giving a mortgage. Next slide, please. Yeah. So what are the things that we need to know when it comes to getting a mortgage? At first, you need to identify a property. So find a property that you want to buy when you want to get a mortgage. That's the first step you want to do. So know your budget, then know, okay, this is what I want to buy. I've seen what I want to buy. So identify a property, then also ensure that the property you want to buy has intact documentation. When we say intact documentation, we are saying that that property must have a registered title. It's very, very important because we need to understand who has the legal capacity to transfer the title ownership to you. So the property he wants to buy must have a registered title. It must also have a building plan approval. We don't want you to buy into what a property that does not have an approved building plan. So that's also important. And it must also have a registered survey. So those three documents are very, very valid when you want to buy a property. It must have a registered title. It must have a building plan approval. It must also have what you call a registered survey. Then there's also equity contribution. Kindly go back, please. So equity contribution is your own part of the property price you want to buy. So there's no mortgage bank that is going to finance any property purchase 100%. It's not done. They will not buy it 100%. So you have to have your own part in the scheme of things when you want to buy a property. So the minimum you can have is 10%. You can also have to 30%. So that's the equity contribution, which is a percentage of the price of the property you want to buy. Then in some cases as well, so you can also add 25% of your RSA. You can also use that to be part of your equity contribution. Next slide. Now, so the next
Please,
question we
what's RSC?
So RSA is retirement savings account, your pension. That's RSA. So there's government policy that runs that. So whatever you have saved as part of your RSA, you can access 25% of it to add as part of your equity contribution. So that's what your RSA is. So it's allowed. Okay. Then again, the next question we're asking is eligibility. How do I know if I am eligible for mortgage? So these are the basic things that we look at. Number one, someone coming for a mortgage must have a proof of consistent and verifiable regular income because your repayment must come from somewhere. So you must have is consistent, meaning it comes every month. That's one. Then we can verify that actually this person has an income. Then also you have minimum of 5 years left in active employment. So basically in Nigeria, we cap not generally, retirement age is at 60 years. In some professions, like the judges, the medical doctors, government puts theirs to 65 years. So whatever age you have now, if you minus 60 years from your current age, it will give you the maximum tenure you can take in terms of mortgage. So someone that is 45 years now can go ahead and take the full 15 years available under mortgage. But someone that is 5 years, let's say you are 55 years and you want to take a mortgage, we can give you 4 year tenure on that mortgage. Okay. Then you must also have a clean credit report from credit bureau. So that's it. Meaning that when you're coming for mortgage, we're going to do a search on your credit history to see how you have behaved in time past when we have been able to access some other loans, because your BVN gives us access to all your histories in the financial industry. So you can check. Now, this person, how is this person's character? When you borrow money, do you pay back? So we look at all those issues to profile someone that can take a mortgage. Then we also have co-borrowing is allowed. When we say co-borrowing, you can borrow with a partner or your spouse. So in the event that your own monthly income cannot cater for your repayment, if what you are earning is not enough to take care of the repayment, you can co-borrow with someone. So you and your wife or a partner can come together and access a mortgage. So that will give you more leverage in terms of the monthly income that you're going to use to assess if you have the capacity to pay back. Next one, please. The repayments. How do we look at the repayments? Because when you take a mortgage, you need to repay back. So your repayment is it's 1/3 of your net income. So what we are saying here is this: when we work out your monthly repayment schedule, how much you are supposed to take back to pay back monthly on the mortgage you took. So I'm giving a figure. Let's say the figure we arrive is at 500,000 monthly. So that is what we are supposed to pay back. So for someone whose repayment is 500K, it means that you need to be earning at least three times of what your repayment is. So if your repayment shows 500, the implication is that you must be earning at least 1.5 million to be able to service a mortgage of 500,000 every month. So that's what we are saying here. Because the policy is that we are not supposed to pay more than a third of your monthly net in servicing any debts. So that's what we are saying here. Then what we do is that we place direct mandates on your salary account or your primary account. So you're going to fill a form that authorizes us that on the date of the repayment, we can access your account, your main account, and take your repayment from that account. Then where there is a co-borrower, so in places where you are borrowing with a partner or with your spouse, we're going to pay direct mandates on the two parties involved. So both of you, you will have given us a percentage we are taking from your account or also from the account of your partner. So on the date of the payment, we just go to those two accounts and take the debit we want from those accounts. So that's how the repayment is being serviced for me. So why do you want to take a mortgage? So that's one question most people will always ask themselves. Why should I get myself involved in a mortgage? Why can't I just on my own just buy the house outright? Number one is a due diligence. Now, property is not something you want to just dabble into and buy. Is a conscious decision when you want to buy a house. Now, when it comes to take using a mortgage, there's some due diligence we are going to do on yourself, mostly on the property you want to buy. You can see so many things happening here and there right now. There's a place in Lekki that was demolished in Aja. Is Palm City in Aja? We saw what happened there, what they demolished there. Now, if they had done due diligence before they buy into those houses, they would have avoided all those mishaps they feel. So that's what a mortgage will help you to do. It will help you do necessary due diligence that you should take before you buy a house. Number one of them, it will show charting for you. Charting will tell you that house, where they build that house, are they supposed to build the house there? What is government's plan, government intention for that particular area? That's what a charting will tell you. So these are so many things that we do in terms of before we give out a steady income, the placement of a house rent. So when a mortgage will allow you, a lot of people they are paying maybe 5 million, 6 million yearly in rent for a house. Why spend that lot of money when you can convert that money to your monthly repayment when it comes to mortgage? Most people don't know. By the time you look at that, if you stay in a place for 5 years, you will end up paying almost 20, 30 million. That's a lot of money that you could have invested to pay off your mortgage. Then also flexibility to wind down. So if you do a mortgage, we give you access. You don't have to, if you do a mortgage for 10, 15 years, you don't need to wait for that 10, 15 years to pay off that mortgage. If you have enough capital in 2 years, you can come and liquidate it. Because the fear most people always have is that the interest is always long. So you don't have to wait that 24 years. Even though you don't have to wait for 10 years, even though you have a 10-year mortgage. Whenever you have a large chunk of money, you can always come and liquidate your money. We have right now this new tax law. If you are paying a mortgage, you can benefit on tax relief because you have a mortgage. So that's another value, another gain you can also have. Then also property price, property increase. You buy a house right now. There was a project we did last year with one of our developers. They were selling it for 58 million. The price currently right now is over 75 million just in 1 year. So if you say, let me buy this house now, it's a good step you are taking. Because in the next 1 or 2 years, even though you don't have the money, take a mortgage and acquire that house because that house is going to appreciate in the next 2 or 3 years. Full please. So what are the financing options? I think basically this is one area most people want to get involved. So we have various financing options that are available to you when you want to take a mortgage. The list of them is the NHF. NHF is National Homes Funds. The rate is 6% annually, and you can take it for up to 30 years. And the equity contribution involved is 10%. and you can get up to 50 million, even though that 50 million has some certain criteria. Not everybody can access that 50 million, okay? So there's some conditions that you have to fulfill before you can access 50 million under NHF. Then we have FHF. So FHF is the Family Homes Funds. So the interest rate per annum is between 13% to 16.5, and you can get it for 15 years, okay? And the equity contribution under FHF is 10%. And maximally, you can access 90 million under mortgage. There's no condition to it. Once you meet the 10% equity contribution and you have a verifiable income, we can profile you and you can get FHF. Then we have MREIF. So MREIF is at 9.75%. That is the interest rate, and the maximum tenure for MLIP is 20 years. And the equity contribution varies between government workers and non-government workers. So the non-government workers, the corporate guys, the equity is 20%. You have to have 20% before you can access MLIP. Then for the government workers, so the equity entry is 10%. And the maximum volume you can get in terms of financing under MLIP is 100 million naira. Then we have our own Imperial Homes Mortgage. Now, why we have this is very simple. Now, the government funds, we look at them, 100 million, 90 million, 50 million. There are some houses you want to buy that you need more than 100, you need more than 90, you need more than 50 million. So in those instances, you may need the bank's own funding to get those ones. And so basically, that's how the financing options are available to you based on your need and based on your profiling. The next slide will be. So what are the mortgage process? So if you want to start now and you want to get a mortgage, what do you do? The first thing is to open a current account with the bank, which is the first step. You can't take a mortgage on a savings account. It has to be a current account. Then you make the payments for the relevant equity contribution. So whatever house you are buying, if and whatever based on the financing you want, the required equity contribution, you have to make provisions for it. Okay. Then you submit documents for valuation and for us to approve. There are some documents we share with you for your profiling, for us to assess your credit history and all the rest. Then we have documentation and agreements. Then once all these are done with these bosses and you obtain your keys to your home and you can move in. Next slide, please. Now, I want to talk about home vest. So why I'm talking about home vest is this. Now, don't forget, the ones I've mentioned earlier is basically if you have your equity contribution ready. You want to buy a house, the house is ready, and you have your equity contribution. What I've said so far will apply. But what of instances that you want to buy a house, but you don't have the equity contribution ready right now? So what do you do? I will still saying for those that don't have the equity contribution, you can't still buy a house. So in Imperial Homes, we said no. What we can do is this. We have a product called HomeVest. So we can go to the next slide, Phoebe. So HomeVest allows you to save towards your equity contribution. So it's a product that we design that allows you to save. So you know yourself. So you know, okay, fine. I want to get a house and the house is 100 million. If the house is going for 100 million, it means if I want to do 20% equity contribution, I will need 20 million. So the question is that, do I have 20 million right now? So if the answer is yes, you can go to mortgage straight away. But if you don't have that 20 million, will you now be deterred? Are we now saying you cannot get a house? No, we are saying no. Begin a home invest account with your homes right now and begin to save towards your equity contribution. Okay. Now, what you do is this. You open the account with us. What you can give yourself a time frame. Is it 9 months? Is it 1 year? And begin to save. So as you are also saving as well, what you are doing is that you are earning 15% interest rate on that account. Your money is not just there sitting idle for you. You are also making money on what you save. Okay. And we can also pre-qualify you for so many options. Like what we are doing with Decla right now. Some of the people that are locking in at the price now, they don't have the required 15 million as equity, but a lot of them has begun saving. And also, as you are saving, the moment you can qualify and you deposit the initial deposits of 5 million, automatically you are guaranteed a unit in that place. Till you finish your equity contribution between 4 to 8 months, whatever price that will affect that they will change, it will not affect you because you have keyed in into that process through the product of called Homevest. Next slide, please. Okay, basically, so this is what Homevest is going to do. So we are trying to solve the problems. Number one, the area of the equity contribution for those that don't have the instant equity contribution that they want for mortgage. So that's what Homevest will solve. Like I've told you, you can save it up. Okay, you can save it up, and you are also adding to your money because your money is making interest for you. And it's also because also to allow you find appropriately priced housing. I'm so sure in the next 6 months right now, the bungalows at Idera, they will not sell them for 75. But with Homevest, which I've mentioned earlier, with that small amount of 5 million, as against the 15 million you need, you can lock down that price. And we also like make mortgage available for you. So at the end of your savings tenure, we can assess any of the mortgages options we have for you to buy the house in full. Next slide, Fubi. Next slide. Let's leave this slide. Next slide. Fubi, next slide. Next slide. Next slide again. I think it's done, right? Right. It's actually done there. Yes, so let's talk about the last page. So this part about the fees. Again, what you want to know is that if I'm getting myself involved in a mortgage, what are the fees required as well? So these are the basic fees that are required that these are the things that are you have to pay. So number one is the due diligence fee. It's for KYC, it's for chatting, it's for title search, and it's also for valuation. So we have to do some, like I said earlier, we do a search on the property you want to buy, okay? And also on yourself as well to be able to ascertain your credit history. And for locals, for those who are local in Nigeria, equity contribution is sorry, for your due diligence, it is 350K, not 300K. 350K for due diligence. And for those who are in diaspora, it is 500,000 naira. Now, once your mortgage is approved, there's a fee you pay called mortgage advisory fee. It's 1% of the loan amount you are taking. Then we also have stamp duty that goes to government as well on the mortgage. Then you also have the custody fees we have custody fees. Then you also have what we call insurance. Let me speak a bit about the insurance. Okay. Now we take insurance when you are buying a mortgage. Two particular insurance will be taken when you are buying a mortgage. Number one, we take insurance on the property that you are buying. For the cost of the mortgage, that property will be on insurance, okay? And also we take insurance on the person taking the mortgage. Actually, you're going to take two insurance on you that you are taking the mortgage. Number one, we'll take a credit life insurance on you and also a job loss insurance. Now, when you say job loss, somebody's on the mortgage right now, and let's things happen in life. You see, life happens, and the person loses their job. So are we now saying if you lose your job and you can no longer pay for your repayment, what happens then? So what happens here of your repayment just for 6 months? We want to believe within the next 6 months, that person can get back to his fees and get a new job. Now, if that should take longer than normal 6 months, we can have some other discussions with the insurance company. But basically, when there's a job loss, for the next 6 months, the person loses job, the person will notify us, and the insurance will be notified, and they can take care of the repayment for the next 6 months. Now, in case of permanent disability, somebody is on a mortgage and they now have permanent disability, they can't work anymore. Of course, when they can't work anymore, there's no way they will service that mortgage. It's not possible. So in that case, the insurance comes in and totally clear off every outstanding exposure. They will pay off that mortgage in case of disability. And also in the case of job loss of life, somebody's on a mortgage and the person dies. So what happens? Automatically the house is being paid for instantly, and we move the ownership of that house to the person's next of kin or the person's beneficiary. So that's how the insurance works. Next slide, please. So this is just basically the breakdown of it. You can go to the next slide. I think I'm done right now. So we can take all necessary questions that we have. Thank you so much. Yeah.
Like as the last person asked now, okay, now let's say for example the client has made a payment for the equity contribution finish. Now in the case of this celebration pack now, that we already know that okay, it's an off-plan project that clients are keen in now, and we have a client that wants to drop that equity contribution at once. So what now happens to that client? Is the client going to wait until when the company is going to construct his or her house to the lintel level before the mortgage company will reimburse, I mean, will pay off? That's number one. Then number two, how long does it take after, let's say, after all necessary documentation verification has been done? How long does it take for the mortgage company to finance the project so that the clients can know that yes, they have actually subscribed into a property? Thank you.
Okay, on the first question you asked, so the client has finished all the equity contribution. Is the client going to wait before? So if like I said, just what I said earlier, as long as that house is not 90% ready, you can't take a mortgage. Okay, is a national is a regulatory policy set by CBN.
Mhm.
So what happens in the case of a off-plan project like what we are doing for Declan now is that so I know they have some units that are so they are putting all their efforts to meet up with the timeline for development, and I heard there are some units already at 90%. So if your client is able to do the 15 million equity contribution, I'm so sure your client can move to mortgage. We have clients already, we are pushing them to mortgage right now because they've met that 15 million equity contribution. Now, in the event that at the time your client has done the 15 million, there is no property at 90% yet. So your client is going to wait till they have one. But like I said, the money your client is saving with us in Imperial Homes is in a special account called Homebase. So that Homebase account allows your client to also enjoy 15% interest rate on that money deposited. So your client's money is not just sitting idle with us, more money for them. And once the declar has gotten 90%, then they advise us. For this person, we are at 90%. Okay, they just give letter of allocation and we process the person's mortgage. So that's how it's going to work. Okay. Now, you said how long does the financing take? So when we move a client to mortgage, between the time we start the mortgage process and disbursement is just 4 to 6 weeks. It's a very short period. So once the clients finish equity contribution today, we engage that client that okay, you have fulfilled your equity contribution and it's time to move it to mortgage. So they began to like ask the client to submit some document to us to verify basic things and all those. So at the completion, the moment all the documents we requested for are submitted and disbursement is between 4 to 6 weeks. So that's the timeline it takes to finance.
Okay, thank you, sir. Like, what are the documents that the company is going to require so that we'll let our clients know ahead? Okay, maybe their pay slip, their NIN, or whatsoever that the company is going to be requesting from them.
Okay,
Thank
I'm going to share a list with Dekla and they can share with everybody as well. So basically, you need to be a Nigerian. You need to have your BVN must be there, your NI must be there to open an account. They will also request for your international passport. So if you are working in a place, we will need a reference from your company to show you are working there. We will also need your letter of employment to identify you are working there, that you have a job, okay? And we also need your bank statement for 24 months, for 2 years. So you supply us the bank statement for 24 months. Then you also give us access to access your BVN to check all your credit history. So those are the basic things. Then you also need your tax clearance. You're going to need your tax clearance because once they issue you a deed of assignment, we need to perfect that. And Lagos State will not perfect your title if you don't have a tax clearance. So you need to work on getting at least require 3 years tax clearance. So you must have that. Otherwise, you can't need that you.
I have a
Hello,
question.
hello, good morning.
Hello?
Yes, good morning. Go ahead, please.
Okay.
Yes.
Uh, so, Yemisi, do you want to go first or I should just go ahead?
Oh, please, I just want to ask one small question. Please, can we have
Okay.
this slide so that the clients can know if they are on 5 years, what amount their total mortgage is going to look like? If you're on 10 years, 15 years, so that they can have an idea of what this interest is going to, look like, depending on their age and then the number of years that they decide to go for.
Okay, I'm going to do a breakdown. I will do a breakdown, and before the end of today, I'll do a breakdown that will show a client's the equity part of it and also the
Okay.
mortgage part of it, and I will share with Decla so they can share with everybody. I will do a slide.
Okay. Thank you.
Okay, so I have two questions that I want to ask. First is on the tax clearance that you mentioned, sir.
Okay, sir.
So if say I'm on employment, usually there is tax deduction that is being carried out on me on a monthly basis as a client. So how does that look like? Does that is it a separate agency that I have to go of Lagos State government to get that tax clearance, or is something that I will just get maybe from my employer, or how do I really go about that tax clearance? That's question number one. Then question number two is that let's say for example I'm making my equity contribution and I've completed all my equity contribution. And then, and this question is good for both the mortgage facility and as well as also the Declare Group. So let's say I have made my equity contribution complete, and then I have a duration of 6 months that I want to raise 10 million naira, for example, in addition. And then I say, okay, can you give me 6 month period while you are processing, let's say total, maybe let's say my equity contribution is 20 million naira, for example. And then I want to up by in the next 6 months another 10 million naira to make it 30 million naira to be able to request maybe, for example, 45 million naira from the mortgage facility. Is that a possibility to say, okay, just give me 6 month period between the Imperial Mortgage Home and the developer to say within 6 months I want to add an additional 10 million. So what I'm requesting from the mortgage to be able to reduce my credit facility. Is this something that is possible?
Okay, from your first question about the tax clearance, Mr. Joshua, so you are asking how can you get your tax clearance? So if you are I want to believe if you are in a structured paid employment, every month your company takes out your tax and they remit to the government. Okay, so where I work, so what happened is that at the beginning of a new year, which is January, our company files our tax report, and they file on our behalf. They file, so I can always go to my Fincon. I don't know the name you might call it in your own area. So I can ask my Fincon to help me access my tax clearance. So it's been done. So when you work, via your HR and your Fincon, since the persons that the one remitting your monthly tax, they can also assist you to get your tax clearance. So that is as simple as that. Okay, so just talk to your HR or your Fincon that you want your tax certificate, so they can help you get it. So that one I know very well is sure. But for those who are self-employed, they are the ones that might have some challenges obtaining their tax clearance. So what they will need is to get they have to approach it Lagos State Tax LRS office, and they will carry out an assessment on them. If you are in self-employed, either you get someone or you walk up to LRS and tell them you need a tax assessment. So they will look at your income. They will give you fill some forms. They will ascertain how much your annual
Hello,
income
can you
is.
hear me?
So they will now give you an assessment of what your tax should be for 1 year. So you have to if you have not paid before, you have
Hello.
to pay for 3 years. So that's how it's being done. For those that are self-employed, they will need to get a tax assessment done on them to actually ascertain how much their tax
Hello,
should
can you
be.
hear me?
So and they will require to pay it for 3 years. You have to have a 3 years tax clearance. But for those who are gainfully employed, I'm so sure their HR and their FinCon can help them assess their tax certificate. Yeah. Then the second question you had, Mr. Dazi, is that what if you finish paying your equity contribution? Now, the moment we move you to mortgage, before we disburse, before we disburse, you can still play around your equity contribution. Now, why I'm saying so is this: when you apply for a mortgage, it goes through a process called in the bank called MCC, and it's general. So they, at the MCC, they would ask this person coming for a mortgage, how much does he have in equity, and how much mortgage is he asking for. So they will have decided that at the MCC. MCC will have said you have 15 million, you want 60 million. So they will approve 60 million for you. Now, if they've not disbursed, we can still amend it. Okay, but the moment they disburse, it means you have paid fully. So it means you can't do anything at that time right now. You have to wait. Because like I mentioned earlier, you can part liquidate your mortgage in 1 year or 2 years. So it means you have to wait an extra 1 year for you to part liquidate that. So what you can do is this. What you can do is this, sir. What you can do, if you know you want to increase your mortgage, you can have a discussion with us. I think DECLA allows 8 months equity contribution on 1 year on this particular project. Since you have done your initial 5 million and you have even done your equity contribution, just wait a bit. Tell us, don't move me to mortgage yet. Give me 6 months more. 6 months is still within the plan for DECLA. If I'm wrong, so you can come in. So I think you still have a 6 months, more than 6 months grace to do that. Okay. So you have 6 months to increase your equity. And once you increase your equity, the amount the bank is giving you as a mortgage will reduce because you don't need up to 60 million anymore. So that's what I would advise. If you have not disbursed, it's still possible. But if you engage for mortgage now and you know you want to still wait more time, you can tell us that you want to wait for more time for your equity. And I think it's still in line with the project time frame with DECLA.
Okay, thank you. Sorry, just a quick follow up again.
Okay.
Let's say for the proof of income. So I am on pay employment. I give you my 3 years bank statement. And then let's say I have a side business I'm doing that I'm using to up my mortgage repayment structure.
Okay.
Is it also advised I give you the two bank statements from my side business and also from my paid employment? Is this something that you request for the two, or just the paid employment is okay for you?
So in most cases, I think okay, in some cases, if we analyze you and we found out that your monthly net income is okay to support your mortgage, is fine. Okay. Now, in the cases where your monthly income cannot cater for your mortgage, now we would ask you a second question. Do you have any other upfront payments? Do you have any other income? So there's a space for that as well. Okay. Now, if the answer is yes, you need to tell us. So we'll now assess that other income and see if with the other income you can now cater for your mortgage to tell us. So that would help your case for the mortgage. That's how it works, sir.
Thank you.
You're welcome, sir. So another question, please. Yeah.
Okay, hello, sorry, please. I want to ask again. Yeah, number one, based on what this last person asked. Okay, now what if we have a client that the client is not a salary earner, maybe a business person or self-employed, and they want to apply for mortgage? Is that allowed? And what do we need to get from them? Is bank statements alone covers for them? Number one. Then number two is that the 26% interest for the one of the Imperial mortgage now. Is it 26% of the loan that the mortgage company is offering, or 26% of the price of the property? Please, I need a clarification on that.
Okay, for business owners that want to apply, business owners can actually apply for mortgage now. So in their own case now, what we are going to need is the audited statement because the business is their income. So they will give us 2 years audited statement of account. That's what they will give us. So they are not like regular people that have monthly job. That one, their company will reference them. We'll see their offer letter to know they are working, and we'll see their in 24 months. We'll have seen their salary comes in at this time every month. So that's what we check. But for those that own businesses, so what the bank will do is that will give us you get an auditor, an accountant to audit your account, your business account, because that shows your earnings. So we need 2 years. In some cases, we might go up to 5 years, okay? And you give us 2 to 5 years audited report of your company. and you also give us projections, the next 2 to 5 years projections of the company. That's for business owners. So we don't.
Wow.
So NPL is from the government. So NPL is a factor of the NPL. What government advises every month. So if NPL is 27%, we give you like 2% more than that. Okay. So what we expect from you is 30% equity contribution. That 26% you are seeing is the interest rate. It's not the equity contribution. The equity is 30%, but that interest rate can fluctuate based on NPL. NPL government advice. The government says NPL for this month is 27%. The bank won't give you at 27%. We're going to add 2 more percentage to it to make our own money back. So that one can fluctuate. But the government loans, the MREF, the FHF, the NHF, the rate is constant for the rest of your mortgage period. But it's not so on the bank's own commercial because it's subject to what NPL says here.
No, you're not getting my question. I asked that the 26%, which is the interest from the mortgage side, is it 26% on the loan that you are offering or on the price of the property?
The loan, please, on the loan. It's on the loan.
Okay, on the loan. Okay,
Yeah.
now, based on what you said last, now that depends on the government advice. Now, are you saying that once a client have started on a 26% with you and is still paying the mortgage loan and the government rates changes, is it going to affect the clients that are already in the process?
Yes, it's going to affect the customer because, like I mentioned, it's not the is subject to NPL. So NPL we got is monetary policy rates. The government advises us on that every month. So the government tells us at what rate we should lend money, at what rate we should also give interest rates. So if the NPL has reduced, let's say the NPL for this month is 27%, there's no way any bank will give you below NPL. They are making a loss. So the more what they can do is to give you at 29% for them to also make interest.
Ah, okay, what I'm saying is that okay, like a client has already has in mind that okay, every
Give
month
us
this is my repayment amount. Now the following month MPR increase. That means the monthly repayment for that client is going to increase.
yes, and the bank will advise you. In most cases, we always advise customers that NPL has changed, so it's going to affect what the rate at which you are getting the money. Yes, the bank will
Oh,
advise you. But for the
okay.
government loans, the FHF, the MREF, and the FHF, it doesn't. It's constant through the years of your mortgage. The worst case is that that one has a tendency to reduce, not to increase. So that's the difference between the government loans and the commercial loans here.
Okay, sorry, I've been raising my hand since, but it seems we are not following the queue. But let me speak now.
Okay,
Um,
sorry.
yes, so I want to ask regarding the 90% completion. Now, I heard you say that 90% completion is when the roof has been fixed. Now, for me, it might it's quite subjective. What if, for instance, you gauge 90% as roof being fixed, and maybe some interior stuff are yet to be fixed? Now, who follows up with the declare as to when those things will be fixed? So you don't want a situation where you pay money and it's gauged 90%, and then we now have to still follow up for 2 3 months for certain things to be fixed, and then your mortgage starts counting. So who is responsible for following up with them? Then secondly, within your slide, I read 2 instances where you said MREF maximum amount givable is 100 million. Another slide said 70 million, and I think home versus around 60 million. So I just want clarity around that.
Okay, so basically, if you are getting, let me start with the project stage first. So what I mean is that uh, before we can disburse and push it to mortgage, the house at least 90% done. It doesn't mean you're going to move in at that time. You're not moving in yet because the house is not completed. But we can push you to mortgage. And there's a project timeline that Decla will share with us. And we also have a project team that monitors all these things. Okay. Now don't forget the bank's money is involved. So there's no way the bank allows developer to do as they like. No, you can actually trust us. We've been going back and forth with Declare in terms of moving clients to mortgage because there's some conditions that needs to be met. So trust me, we won't just give money like that and the project will be abandoned. It's not done. So there's adequate project management involved the moment the bank's money comes in. It's not our money as well. So when the bank's money comes in, So when they will finish, there's a strict timeline on development that everybody will adhere to. So you can be so assured that that will be monitored for the later. So we do that actually. Your next question, Mr. Ayo, sorry, please. I'm on what I call you. Sorry, Mr. Can you hear me?
Yeah, I can hear you. Next question
Your,
was that what's the maximum amount? I've seen three different amounts: 170, then 60. So which is it for Emrif?
Okay, fine. So for MLIF, on MLIF itself, MLIF gives 100 million. That's MLIF. If you go to MLIF right now and you want a mortgage, the maximum loan you can get under MLIF is 100 million. Okay. Now, don't forget, MLIF is a limited fund. When I say limited funds, so each banks, each commercial bank, each mortgage bank, they has the limit they give. So some have 3 billion, some have 10 billion. So it depends. Okay. Now, so it now depends on how you're going to manage it. Now, the reason why we limit our funding in some places is this regarding declare. So we have declares come, they have clients that want to take a mortgage. So there's no way the bank is going to increase their exposure on a project. And we begin to give everybody on that declare project 100 million. It's not possible. So it means if we're going to all our exposure will be so much on this particular project. So all we do is that we regulate how much we give on this particular. And if you look at the property of the property they are selling, the property is 75 million. So based on the provisions of MLIF, you need 20%. If what you need is 20%, 20% of 7.5 million is 15 million already. And the property price is 75. So it means you don't need more than 60 million anymore. So that's why it's on 60 million for this particular project. Required for that project is a 75 million house. So what you need to do is that you have 60 million left on that particular place. So it means you are fine. So that's why we are giving 60 million on this particular place. So it means you are fine. So that's why we are giving 60 million on this particular project because we need to bring you in your own 50 million. So in some cases, it may require 80 million. So you might go 80 million. In some cases, what you need is
Hello
70 million. So
everyone, you
based
can
on the
join the
nature
meeting
of
on
the
Google
project
Meet through the
and the
link I
equity
just sent.
contribution, we structure what we should give
It's now
on
holding
this
on Google
particular
Meet.
mortgage. I hope that answered your question, sir.
Thank you. Thank you.
Okay.
Okay, so what I want to ask is what is the framework for this celebration bungalow as regards to what Imperial Homes want to do for the client?
So in term, what we want to do for the client, basically we give you mortgage, that's one, and we also give you post mortgage services. Okay. The main thing here is to one assist you lock down the price of this particular place. With initial, we are saying that bring 5 million. You don't have to wait for all the 15 million to lock down a property. If you have 5 million and you know you have the capacity to spread the remaining balance between 8 and 12 months, we can assist you to lock down a unit at this price because the price will change very soon. But for those who've been able to like do their initial 5 million, any price change is not going to affect them. Secondly, is that we are going to assist you in getting a mortgage for the balance of the property price. Then we also render to you post mortgage services in terms of title perfection. So the deed of assignment declared they are going to issue to you, you need to perfect it by converting the legal ownership of that place to your place. Until you have done that perfection process and get your governance permission, legally you don't own that house. So it's one of the things we are also going to do for you as a post service we are going to render once your mortgage is disbursed. Yeah.
Okay, number two question. You were talking about, for instance, the mortgage is disbursed and a particular amount is being, um, stipulated for the client to be paying monthly, and that there will be a certain time that that price will change. That is, the amount that the client is paying will change. I want you to clarify it for us. Why is the changes in price? For instance, the client is paying 1 million naira every month, and at some point the price now shoot up to maybe 1.5 or 1.2 as the case may be in other months. So what make it happen that way is what I want you to clarify for us so that we'll have a better understanding.
So what I actually said, I actually didn't say that. So I was just trying to clarify what happens when a client takes the commercial mortgage. So for this particular project, what everybody is taking is a MREF mortgage, is a government loan. You are taking a government supported mortgage. You're not taking the commercial mortgage of the bank. So that will not affect you. So what the client is taking in this stage is called MREF, okay? And MREF is at 9.75%. So all through your mortgage, your price, what you are paying is not, your monthly payment is not going to be affected. Is not. But I was making, there are some instances where you want a mortgage and the government loan cannot cater for your mortgage. So what you would need is a commercial mortgage of the bank itself. That is not the case here. The case we are dealing with here is a case where what we are pushing for everybody involved is a is the government mortgages, and it's at 9.75%. And the amount you are paying throughout your mortgage duration will not change. So that's what I'm saying.
Okay, it's understood now. Thank you.
Grace Divine, I believe you have a question.
The question. Yes, I
Okay.
have a question.
All right, please go ahead.
Yeah, good morning. My question is concerning the account, the two the home vest account and the other one. Because I've had a situation where the client were made as if it's a mandatory to open a home vest. So from this explanation now, home vest is optional. So the client can, if the client have a substantial amount of money, can actually open the current account and move on.
Okay, let me just clarify it a bit. So home base is very, very much optional, but in this case of this particular project is not optional. The client has to do that. Okay. Why I said so is this. So if your client has a 15 million, they can bring all the 50 million and put in their current account. Now, but don't forget, the house is not yet ready for your clients to take a mortgage on. So it means your client will just have 15 million seated in an account doing idle. It's your choice. You can put it there. We will not complain. Okay. Now, when the time for mortgage comes in, all we have to do is to move your client to mortgage. But we are saying that it will not be fair on us. We are saying there are some people on this call, they finished their equity contribution. Okay, I don't want to mention names. You can ask them. Their money is in their own best account, and the money is making more interest for them. So that's what I'm trying to say. But majorly for those that don't have the equity contribution, home base is very, very compulsory because you need to save it up. And you can only save it up in your home base. But I'm now saying, even if you have your full amount of 15 million, it will be wiser for you to put that money in your own best account and be getting interest on it till you are ready for mortgage. So I don't know which one, if I were you, I would prefer to have, we're not, it's not, the bank is even paying you interest on it. You don't have to do that. They are still saying, open the home base account, put it there until the time of mortgage. Somebody's on this call, they've done their mortgage money since the past 2 months or so. Their money is there in the home base, any more money for them. Imagine if it's just in your current account, the money is just there, only 15 million, nothing will have been added. So that's the benefit of moving the money into the owner's account here. Any more questions, please? Yeah.
Good morning.
Yeah. Good morning. Yeah.
Okay, very wonderful class. I mean, very informative. But I just have one question. I
Okay.
know you mentioned it before. What's the interest on the home vest?
As on the home base, you earn 15% annual interest rate. Just the same, we match it with what treasury bills will give you. So you earn 15%. That's what you earn on the home base, yeah, annually.
Okay, thank you, sir.
Yeah.
So are you saying automatically if a client make a deposit of 5 million naira, the home vest account will be open automatically?
So the person will first open a primary account, a current account with the bank, because that's for your mortgage account. So once you open the current account, we now open the home base account for you.
So
So it's now
is there any money that is going to be paid to open that one separate, or the 5 million can
no.
cover for it?
So open account with the bank is free. You don't need to pay money to open the bank.
Okay.
You can come in and open the bank account for us. But we are saying that to lock down a unit, you have to deposit 5 million naira and balance the remaining in some few months. Okay.
Okay,
But to
now I
open
get
account,
it.
generally, you don't need to pay any money. It's free. It's a normal account you are opening. But for this particular project, to accommodate the timeline of the developer, we need to lock down to secure a unit. Just pay that 5 million initial deposit. Then they will lock down a unit for you and also keep the price for you at 75 million, pending when you can finish your equity contribution.
I understand. What I'm saying is that
Okay.
once a client make that 5 million naira, the home invest account will be open and the 5 million naira will be deposited into it.
Exactly.
So that we won't confuse client that okay, you have to open an account, you have to do some. So some clients will get confused in the process.
Okay. Yeah.
Oh, thank you.
Welcome. Yeah.
All right, sir. Yeah, Mr. Adeyemi, thank you so much. That's very been an impactful section. So
Thank
now,
you.
based on the last question, I'm not really clear. Now, what about clients that don't want, they don't want mortgage, they don't want anything inverse, right? They just want to follow the company policy. This is 3 to 12 months payment plan. Just want to do 5 million deposits. That means you don't have anything to do with inverse or mortgage or whatever, right?
So basically, what we are discussing here are for clients that want a mortgage. That's what we are discussing here.
All right,
For
thank you.
clients that don't want a mortgage, they need to discuss with Declare on a payment plan. Yes, yeah.
All right, thank you so much.
Yes, sir, Emmanuel, we have a payment plan for clients that don't want mortgage. So they can always go with that.
Yeah, I know. I just wanted to be clear. Yeah, I know. Thank you.
Okay. Yeah. Any other questions?
Yeah, Mr. Adair, I would like to ask, how about if we have like some clients that are in the diaspora, yeah? Maybe they have just been in the diaspora for barely like 3 years of and counting, and they would like to key into, this mortgage. How would that fit in with them?
So the government mortgages, any government mortgages is applicable to all Nigerians, regardless of where you are. You are local, you are in diaspora, is applicable to you. Okay. So just that in terms of carrying out KYC, the KYC we carry out for diasporas are different from what we carry out for local. Like I explained in one of the slides, and it is and the cost implication for KYC for those in Nigeria is 350K, and KYC for those is at least 500K. Because we want to carry out anti-money laundering search on them is required by CBN and also a hard search on them. When I say a hard search or a soft search, it could determine because they don't live here. So the credit search here is basically just easy. Go to credit bureau here and carry out the search history. But for those abroad, we'll do AML search and also carry out a head because they have their own, there are ways they do their own credit search. So that's the only difference there. But regardless of wherever you are, as long as you're a Nigerian and you have a verifiable income and it's consistent, you can take a mortgage. It's not an issue, sir. Yeah.
Okay, but how would the tax stuff now work? Because it's mentioned about them having tax clearance. That's for the local.
So the same thing too, assessment will be done for them. So they are not in Nigeria. So it means mostly they don't have their tax here, but they're going to carry out an assessment. So there's somebody on this call. I will refer the person to Fubia as well. She's one of the realtors here. She also works with Eli Harrow. So you can engage her for them. They can do an assessment for them. So basically, when they say assessment, they will look at your income. So how much do you make? Even though we don't have the history, but when we give some information to give, they will see how much income you make in a year and they will give you an assessment. So this is what your tax assessment says for the year. So once you pay that, you get your tax certificate. It's as simple as that. Yeah.
All right, thank you very much.
Yeah. Miss Lydia, please. Yeah.
All right. Thank you so much. I just wanted to find out, like, what's the timeline for all this? Like, how long is it going to take if somebody wants to take the government loan? And what's the time frame for the person to get the feedback that yes, it's successful. I pray not or otherwise, but I mean, what are the times and timelines like for getting feedback and getting the responses on all of this? Thank you.
Okay. So far, what we have been doing so far is that once a client shows an interest that they want to a mortgage finance, we give you a pre-mortgage assessment form to fill. So once we fill that form will tell us how your age. It will also tell us mortgage amount you qualify for lesser amount. So once we fill the form, if you send us an email today, we'll send you another email for you to fill those forms. So in a day or two, we'll surely get back to you to inform you of the pre-assessment we have done, of how many years you can take and how much mortgage you can take. So it's just a day or two that is done. And once, like I said, once that one is done, the mortgage itself takes 4 to 6 weeks. But the pre-assessment to determine how much mortgage you can take, if you are qualified, you can get it in one day. Is that okay, Miss Lydia?
Yeah. Thank you so much. I appreciate it.
Okay, sir, for the
Okay.
assessment, that's after the deposit of 5 million.
No, no. So for the tax, what? No, no, no. So you
Okay,
don't have to
that's
do
for the
that. So once you
tax.
send us that, just send us an email. Yeah, send us an email. What? No. Once you send us an email today, you can talk to Decla. They will give you an email. Just tell us your interest, your name. We'll send you an email. Fill that form. Once you fill that form, I can give you the assessment today. But worst case scenario, the next day you get your assessment of how many years you can take, and how much mortgage you can take. It can be done within 24 hours. Yeah.
Okay, okay. Please, I will appreciate if you can give us your number and the email, maybe your company email, or we'll talk to Declan later. Thank you.
Okay.
Thank you.
Sir, please, one more question. What happened to a client that maybe go into mortgage along the line, maybe like 2 years, decided to opt out and clear her balance? What happened to her? How can she, or how will she do that? Would there be interest again, or would the balance be calculated and then she clear off? How does that work? Please clarify me on that. Thank you.
Okay, so we have what we call partial or full liquidation. Okay, so you can take your mortgage now. So it depends. So if you had RSA to your equity contribution, you cannot terminate your mortgage. You have to wait till 2 years before you terminate it. That's is a CBN policy, okay? But if you didn't had any RSA to part of your mortgage, you can terminate whenever you want to terminate, okay? But regardless of that, when you want to terminate, you are only going to pay the interest due for that month, only that. Now, every other interest for the remaining part of your mortgages, you are not allowed to pay. You are not allowed to. So only the interest due at that month is what you pay. The rest of the interests are cancelled.
Okay. Thank you very much.
Okay, so I have one question, please, sir. Hello, can you hear me? Hello.
I can hear you, sir. Go ahead. I can hear you.
Yeah, so I wanted to know why you decide to do your qualification assessment after the equity contribution. And have you ever had a scenario where a client after the equity contribution and you did an assessment and the client is not qualified? So why is it the assessment not done before the equity contribution, just for the client to be sure that, oh, look, I can get this, or maybe probably there is something that can hinder me from getting the mortgage funds. So is there any reason why after equity has been completed before the assessment is done?
No. So the assessment is done before the equity. We didn't say you do it after the equity. No. What we are saying is that before you start at all, send us an email with your name and your email. Give us an email. I will now send you another email of the process. In that email I will send to you, there's a pre-assessment form that is there. So once you fill that pre-assessment form, it will give me the information I need to advise you of the number of years and the mortgage amount you can take. Until we have done that, I will not send you any other information on the process. No. You first need to understand that So nobody is paying any deposit until they've done the assessment. You need to know. That's what we are saying. You need to, so that's how it works, sir. Do you understand, sir?
Okay. Sorry, I think I missed it up. I was thinking that the assessment comes after the. All right, I understand that. Thank you.
Okay.
Sorry, Sal. Sorry. I'm so sorry for asking question always. Okay, now let's talking about the RSA. Now let's say for example a client that works in a bank before has an RSA account with Stanbic IBTC. Now that client is self-employed now. Is it possible for the client to use that RSA with Stanbic IBTC to apply for a loan here, then continue the monthly payment since he or she is self-employed now?
Of course, yes. Your RSA is your RSA, so you can access it whenever you want to access it. Okay, not whenever you want to access it, but you can access your RSA if you want to use it for your 25% equity contribution. So what you will do at the point of you will let us know, okay, that part of the conditions you want to do is to add your RSA to your equity. That initial 5 million you will still pay to lock down that price. It's very, very important. But
Okay.
when you now want to disburse for the mortgage, you have to let us know. So we can help you process that RSA because your client on his own cannot access that money. You have to go through a mortgage bank to access that money. So the way it's being done is very simple. If your clients want to use RSA, let the client start with the 5 million first. So at the point where the client wants to go to mortgage, there's a form we'll get for the client, the RSA form. It will tell us where the RSA money is. It's Stanbic. We have the form. So your client will fill, put all those information. Then we get some other things we will fill. We will now send that form. We give an offer letter to your client first. Okay. So based on that offer letter we give to your client that he has a mortgage that he wants to work with us, we will now send it to the RSA. They will now make provisions and send us the 25% balance of that RSA. On his own, he can't do that. He has to go through the bank. So it's allowed.
Okay.
You know?
Okay. Thank you so much. Thank you.
Yeah, on the slide
So I will
shown
send.
here.
I will share the slide.
Yeah, okay.
Yeah, I will share the slide with you, and I'll also share the breakdown of the mortgage with you as well. So for them to have an idea as well. I'll send that to you. One of the all COB today. You get it here.
All right, that's fine. Thank you very much. Okay, thank you everyone for your questions. We're glad you were able to join the call. Um, just a reminder, this is the email for the bank. Everyone would also get it again after the call. You can send them your name, the email address, and then the phone number, and state it for the Declar mortgage, right? We will be having the official launch of the bungalows on the 7th of February. That is on Saturday. So it's just in a few days. All right, so everyone is invited. Yes, so everyone is invited for the launch. And everyone has been aware that the price of the bungalows right now is 75 million. That's the pre-launch price. So on the day of the launch, the new price would be 90 million. So everything Mr. Deremy has said, I hope we've been able to have some understanding of it. For the mortgage, the equity contribution right now is 20%, which is 15 million. And it's still going to remain 20% after the price change, but 20% of 90 million would be 18 million. So that would be the new equity contribution required to take the mortgage. So if you would like to take it before then, you can lock it down with the initial deposits, like Mr. Deremy said. Create the account to the bank and lock it down with the initial deposit. The price change would not affect you. So please, if there are no other questions, thank you everyone. Everything that has been said on the call will be shared with everyone as well. Thank you all for joining. Sadarami, thank you very
Thank
much. You've
you.
been very
Thank you,
helpful.
Phoebe. Thank you, everyone. Have a lovely day.
Thank you so much.